Welcome to thestockminer.com. I am Brian Johnson, and we had our first day of the new week. Some mixed signals in the markets today. All right, so we got a push down underneath some lower levels within the Dow. Everybody catch that? I'm not sure exactly which indices you guys like to watch, but the Dow, in most cases, is usually the one that's the most weak. And what we saw today was a break below these levels, below 11,000. I made the mention if it drops below that 11,000, keep your stops tight. Try to take some profits when you can, because I wasn't too sure whether or not the bears would be able to hold it. We saw that they were not able to hold it. Breaking this lower level down here worked out exactly as planned. Big hard push below the 11,000 mark, and then a little consolidation. And as the day wore on, here come the bulls. This was the level they wanted to retake. This was the level they obviously wanted to hold before the end of the day was out, and they managed to do that pretty easily. Break them back above the 11,000, taking it back to 11,052. Let's look at the daily. You can kind of see what we had been watching this weekend too, and that was a break below the 50 and or below 11,000 for the more conservative. Getting right back down near the 10,900 mark, the next lower support area before we saw the bounce. So if you are in this particular trade to the short side, I hope you either A, took profits, or B, decided to get out before the end of the day. If you're holding overnight, I don't know. It's a little touch and go at this point as to which way the markets want to go, because the other indices did not show this kind of weakness, as did the Dow. So break below 11,000, did not hold, coming back up here to close back above 11,000. Now, yes, it is below the 50-day moving average. So still the Dow being the weaker of the indices at this point. But let's see what the NASDAQ did, and you can see a perfect test of this lower blue line before holding, and a push hard to the upside. Did not get back above 2150. Notice that it did touch 2150. So interesting. This 2150 mark, still a very, very strong area of support and resistance within the NDX. And here you can see where it came back down to finish just above these moving averages here. The fact that we saw this kind of a hard push, though, means the bulls are still around. They're not quite ready to give up yet. Further pressure by the bears, though, could change that sentiment a little bit over the next couple days. And that's kind of where we're stuck with this more neutral position. I'm not neutral anything right now. Not neutral bullish or neutral bearish. I'm just flat out neutral after today's information. It's a very, very curious act right here to see it pull right back up, only to stop right below these lines we've been watching. So the daily, watching the daily as well, you can see holding below the 20-day moving average. So we had 1 and 2 closes above it, but could not get any more confirmation today. So the market's still wandering, still trying to figure out which direction to take next. I'm going to tell you that I'm still watching these more major levels, both above us and below us. I like it above 2165 and below about the 21, let's call it this 50-day moving average ultimately. Breaks below that, you'll want to watch the 2060 area very, very closely. NASDAQ on a weekly, won't worry about it right now, but you can see over the last few weeks, hasn't been a lot of panic in the markets as of yet. SPX breaking the 1175-ish area, but not the 1170-ish area, so still holding in this little trading range. While the Dow broke out and managed to come back into it, both the NASDAQ and the SPX did not follow. They both held very nicely to this same trading range we've been watching for the last umpteen days, couple weeks now. And you can see it came back up to retest some of the overhead resistance areas before finishing where? Right in the middle of the channel. So I mentioned this weekend, very, very neutral on the fact that we were in the middle of the channel. Break down, break back up to finish right in the middle of the channel, which is going to make the daily candle look precisely like what we saw on the Dow. And that was a test of this lower area, only to come back up and close right back in the middle of this thing. Nobody is leading the charge here. Bears take it over. Bulls say not so fast. Bulls try to push it up. Bears say no, not quite yet. So still a lot of consolidation. Still waiting for these breaks below the levels of 1170 and above the 1200 mark within the SPX. Weekly won't worry about it, but you can see it trying to hold as best it can to some of these overhead levels. As this thing starts to drop, be very, very careful as to forming a bias in the markets themselves. Allow this market to tell you which way to go next. By far the most safe way to do it. VIX, seeing the breaks above, all these different lines we've had drawn in here, and today falling fast, down 3% after the big gap up. You can see trying to keep holiday day cheer in the markets themselves, holding at this 50. And where was the high? 21 or 23.84, but no close above 23.50. The 23.50 mark is still my line in the sand on the VIX itself. Apple saw a little push upwards today as well, really getting a lot of that about the same time the markets decided to jump up. Apple really feeling the effects from that. However, just kind of slowly grinding their way back to the upside here. This has not been a very, very quick move by the bulls. However, a very steady move by the bulls, forming what some are now going to be looking at with this head and shoulders pattern here on Apple. That'll be the big talk on all the blogs, I'm sure. I really don't panic too much about those things because, until I see confirmation, I just don't get too excited. Still watching this 320 overhead area. That is the more major area to be watching within Apple. From a weekly too, just started the week, but notice these last few candles have been holding up very, very well. I'm really more concerned about breaks below 300 and 295 because we saw lots of consolidation back here, which all ended up being very bullish. So we'll see if that holds true again this time in Apple. FAS 60-minute broke the little blue line, but not over or above our 2225-ish areas. For trades today, really very, very stagnant within the markets from both FAS and FAZ. FAS, as you can see, doing the consolidation thing here. No pushes below 21 and no pushes above the 22-ish mark today. Matter of fact, the high was exactly 22 on the FAS. Here on the FAZ, kind of still fiddling with this channel we've been watching. But once again, no major breaks below our lower level of $12 or above our higher level of $12.60 or really $12.80-ish up here. Same thing shows true on the daily. Holding above this blue, and as long as it does and holds above this blue line, it's actually more bullish for the FAZ, which still tends to be more bearish for the FAS. It'll take a hard push. Look for moves back below the $12 mark and or back above about $12.80-ish and or $13 for your trades on FAZ. Once again, the banks moving sideways, doing this a lot. They move up and then down and then up and then up. So here we have a conglomeration of 5 days of nowhere. Once again, up and then down and then up and then down. Another 4 days so far of nowhere. The bank's really waiting to find out what's going to happen with maybe the Ireland thing. Now, there was the announcement of the bailout. Apparently, the markets were not all that excited about the news as of yet. Still waiting for the banks to make a move. I think that'll make a huge difference in where the overall markets go. Keep your eyes on those as well over the next couple days, and I'll be back with you again tomorrow night. See you then. Bye.